Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Dave V. and Paul M. Scott Hicks is our guest today. Scott is CEO and Director of Strategic Resources, a vanadium-focused company with advanced stage exploration projects in Finland and also in Peru. Strategic Resources is a Lumina Group company. Strategic is listed on the Toronto Venture Exchange under the symbol SR and also on the US OTC markets under the symbol SCCFF. Scott, welcome to the show.
Yeah, thanks for having me, Andrew.
Well, Scott, you've been on the show before, but since you are introducing Strategic Resources to us, can you introduce yourself to the audience and give us your background in the natural resource sector?
Yeah, no problem. I was an investment banker for 10 years at BMO Capital Markets and RBC Capital Markets, working exclusively in the mining sector. I came over to join the Lumina Group about 3 years ago to work with Ross Beatty, Marshall Koval, Leo Hathaway, and the rest of the team. And so far, we've sold Anfield Gold since I've been there, which is now part of Equinox Gold. We've worked on Lumina Gold and advanced that project substantially. Now it's sitting at about a 17 million ounce gold resource, believe it or not. And then we've spun out Luminex Resources, which holds some of our partnerships with BHP, Anglo American, and our Condor project. And now we've just started this new company, basically from scratch here, Strategic Resources, and it's a play on the vanadium space and the vanadium market.
Well, Scott, let's move to vanadium. Can you give us your thoughts on the market for vanadium? And do you see this market as fundamentally different over how this market has behaved over the last few decades?
Obviously last year, in early 2019, late 2018, we saw the prices of vanadium run up fairly substantially. And the main driver there was really China changing their rebar standards and people getting way ahead of, frankly, where the price probably should have been. In these tighter, smaller markets, you can often see these huge run-ups like you saw in cobalt and like you saw in vanadium. But the reality is China is trying to move to better construction standards and higher grade rebar, and vanadium as a strengthening component is key for that. So what we've seen is, unfortunately, a bit of delay in China enforcing those standards despite putting them in place. So prices have fallen back here, but we think there's a fundamental floor in and around the level we're at now. And what we're looking to see is growth in that rebar market and kind of call it the core use of vanadium that'll provide just a normal, call it whatever your GDP level of growth is in the market. And it's only about 100,000 ton a year market, so it's not huge here. And then, what we're excited about is really the potential for growth in the vanadium redox battery market. Now, it's a technology that's been around for a while, but there's a bunch of companies working on building batteries in that space, and we think that it's a unique solution for grid scale storage. So that 10 times fast. And, people will be starting to implement that on solar arrays, on wind farms, so that they can provide power when there's not sun and not wind. And these batteries have a distinct advantage over their lithium competitors if you look at it in a longer term cycle. And what I mean by that is lithium batteries typically degrade after 5 to 7 years. And the only way to deal with that is to put, additional batteries that are fresh in the battery bank. But vanadium batteries typically last for about 20 years. And it's a lot easier to recycle all the material of value at the end. So we're excited about that segment. And, we think if that provides the incremental growth in a small, tight market, that should allow for some price appreciation and overall growth. And what that'll require really is new primary projects coming online. So the group obviously has a history of trying to get ahead of some of these trends, as we did in copper back in the day, and that's what we're doing right now, is putting together, early stage vanadium projects that we can acquire at reasonable prices into strategic and trying to keep in tier one jurisdictions in the world.
In the battery market, if you can get to 20 years life out of a battery, that's substantial. I mean, the amount of waste that is occurring right now with the current battery market that we're seeing coming from the renewable side primarily now, and of course, consumer waste, it is substantial. And it hasn't been addressed. And that's one of the big downfalls of things like the so-called green and renewable energies, is the battery usage, which is a huge problem. So if the technology is able to get there to where we're 20 years, you don't need to replace a battery, that's just absolutely impressive. So let's talk a little bit about strategic resources. I know you covered it just a little bit here for a moment, but can you take us back to the conversations that took place with management? Who and what caused this driving decision to start up this company with a focus on vanadium at this point in time in the market?
So, I mean, we had looked in a couple areas, and Ross has a fundamental view on a lot of these metals I'm about to mention. So we had looked in cobalt, and we liked cobalt as far as the price and market dynamics going forward. But what was challenging for us was finding good projects, which is kind of the problem with cobalt, and good projects in good jurisdictions. And also we noticed that there was a big push to try to not eliminate it, but engineer batteries such that it's using as little cobalt as possible. So after, call it a 6-month search on that front, we decided not to pursue that angle anymore. We're still obviously very bullish on copper as it relates to battery metals. We have significant amounts of copper in our portfolio in Lumina and Luminex, and we're very bullish on that. When we looked at lithium, there's no doubt that the demand for lithium is going to increase. There's no doubt that there'll be price spikes for lithium over time as there's supply shortages. But fundamentally, there's a lot of lithium in the world, and we think that it's just not a niche enough area, and the price volatility over time will be substantial. So it wasn't an area we wanted to focus in. Vanadium was appealing to us just because we had some interesting deals come up and opportunities in Finland. We view Finland as a great place to operate, and obviously a tier one jurisdiction. And as I mentioned earlier, we think it's a tight market, and just a little bit of growth in either the base demand that it's typically used for, or in this battery segment, can really provide a lot of price support. And as far as production of vanadium goes, only about 20% of the market is actually provided by primary vanadium mines right now. So a lot of it's a byproduct of steel production and other secondary sources. So we viewed that the growth was going to have to come from primary mines, and that's where we chose to focus.
Well, let's talk a little bit more details on the company. Can you speak to the capital structure of the company, including the shares outstanding, key management members, cash on hand, and major shareholders?
So when we put the company together last year, we closed the deal in June 2019. We raised just under $4 million Canadian at 23 cents a share. At that time, there was really nothing else in the company. So those proceeds were to fund the purchase price for our earn-in agreements on 2 different properties in Finland, and working capital for the year, and some money for drilling. And really, that's taken us through to where we are now. What we're most excited about is the project that we've just announced putting into the company. It's called the Mustavara mine, and it was a past producer. So we were able to acquire that here for about 150,000 euros out of a bankruptcy process. And I can talk more about that later, but finishing your question there, the cap structure of the company right now, we're sitting at about 31 million shares outstanding after the financing last year, plus the existing capital. Management of the Lumina Group plus Ross holds about 23% of the company. Orion Resources is one of the companies we are earning into their property on. They own just under 10. Similarly, Magnus Minerals would be just under 10% as well, and we're earning into one of their properties. So, it's a fairly tight share structure, and, we kind of know where over 50% of the shares sit, just from the financing and the groups that hold it now. I should say probably over 75% of the shares, we know where they sit, but 50% is with 5 groups. So tight share structure. We'll look to come back to the market later this year to raise money for advancing Moose Tavara, which we now think is kind of our flagship project here, and happy to talk more about that.
Absolutely. Now, where does management own shares at right now and the major insiders? Is it correct to say that everybody's at around 23 cents, or where does that stand today?
Ross put in just under $1 million at that 23-cent financing. The rest of management would have come in when it was a shell, maybe in around between 5 and 7 cents when we were looking at a variety of different opportunities for the company. So that would be the general cost base for everyone. So Ross would have been in at that lower level as well. And then, basically everyone participated in the $3.7 million round last June.
And Scott, can you speak to the capital needs of the company for the remainder of 2020? And I think you spoke to it, or this will bring up Moose Tavara. What is the key project focus for the company in 2020, and what are the plans?
If you think about the earnings quickly, we had 2 years to spend money on our Magnus Minerals earn-in, and we had a year to spend $1 million on the Orion earn-in, which is the Sila Selka property. And then at Moose Tavara, the nice thing is we've got a fair bit of time here, the way we've structured the deal. And what I mean by that is the way mineral concessions work in Finland, you start out at what's called the reservation stage, and then you put in for an exploration application and then license. And during that reservation stage, you don't actually have any land holding costs. So it's nice from that perspective. And because we acquired the intellectual property and existing core and drill database, all that type of work with the project, we think that a lot of the work we're going to do with Moose Tavara at this stage is going to be more desktop based, and hopefully avoid near-term incremental drilling. And the reason I say that is, we have a large existing resource base there already. So the project had been taken to PFS in 2012 and really had an existing JORC level reserve at it of about 100 million tons. So, we're going to work to update that resource and bring it into 43-101. And then we're going to work to update an economic study on it that'll give people a sense of, the scale and the potential for the project that we can, publicly disclose. So to answer your question in a long-winded way, we'll need some money for drilling of Sila Selka, and we'll need money for updating the PEA study at Moose Tavara, and that's budgeting work that's ongoing right now. Drill costs in Finland these days are about $300 to $350 a meter Canadian, $250 a meter euro. So that's work that will need to be done this year.
Okay, so you've got renewal of some of the studies at Moose Tavara, and then the earn-in agreements. You guys are just spending what's required to maintain those earn-in agreements in good standing during 2020, correct?
That's correct, yeah.
Now, Scott, let's come back just a little bit and let's talk a little bit about Moose Tavara here, because I think that's where probably you guys are focused. But what's management's goal in terms of economic feasibility for these projects? So historically, Vanadium has spent most of its time conservatively below $8 per pound over a long period of time. So with vanadium at current prices and considering the titanium iron ore credits at Mustafara, can you give us a ballpark of what management is targeting for a vanadium price? Are you guys looking at stuff that's higher vanadium prices? Or are you guys looking at stuff that's right around current prices that's economically feasible?
Yeah, I mean, we're looking at stuff that it would be in the money or, close to in the money, call it, from a current vanadium price standpoint. So, and obviously we need to go and refresh and redo all the work around what I'm about to say. So, heavy caveat to your listeners, but the PFS that was done on this project previously, that was positive, was run at, call it, $30 a kilogram ferrovanadium, and then obviously had some pig iron credits, but didn't have any value for titanium. So, we're thinking that, and just for your viewers, ferrovanadium sitting at about $28 a kilogram right now. So very close to what that study was run at. Now we're going to look at what the optimal product is here, and think about that when we refresh the study. So ferrovanadium is an option. V2O5 is an option. So it really depends what market you want to be selling your product into, and that's work that we will look at what the kind of optimal scenario is when we update the study. We're not looking at projects that need a $10 or $15 vanadium price. We're trying to find things that work in and around the current prices. Now, obviously, when it got down to $5, that's going to get tight for every primary producer out there, and you're not going to see a lot of new primary production coming online. But we think that the equilibrium price will be higher going forward.
Scott, as you know, there are a few other vanadium companies competing for investor capital at this point. What advantages does Strategic have over peer companies that are also focused on vanadium from both a project-specific standpoint, access to capital standpoint, and a jurisdictional standpoint?
I think from a jurisdiction standpoint, we're obviously, in a mining-friendly jurisdiction, not too far from port, good power rates. These are all things that are pretty key. Access to the European markets, access to the Asian markets. So, these are all going to be very important drivers when you think about vanadium and steel making applications. Project-wise, we've decided to focus really on VMT deposits, so vanadium magnetite titanium deposits. A lot of our peers out there might be taking a different approach and looking at these very large scale shale deposits. We're not as optimistic on that. We think there's a lot of complexities around the metallurgy there and potential for substantial operating cost overruns on some of those deposits. That's our internal view right now. Things evolve, and you have to look at things on a project by project basis, but that's where we're looking, is in the VMT space. So I think between the projects we picked up at what we consider to be very attractive prices, and the jurisdictions we focus on, we're trying to create a pretty interesting value proposition for investors. To get a project like Mustafara for 150,000 euros, and obviously we still need to wait for it to close here in Q2. But that is a very attractive entry level, and provides a fair amount of error for margin for error, on the other side of things. So we're excited about that entry point, and using that as really a base for our Finland pursuits.
Access to capital for you guys should be a fairly easy hurdle in light of any market condition, whether things improve in the broad market from here and things smooth out, or if things turn more sour. I think you guys probably have a good proposition to continue even in a market that's not very suitable in the short term. Can you speak to the timeline and strategy for Strategic? Are you guys looking to get these projects, specifically Mustafara, advanced fairly quickly? And what do you see as, just give us, if you could, give us the next, give us a timeline on how you guys see this going. And then also, What's kind of the end game for strategic? Is this something that you guys are going to fix up, build an asset, and look for a sell-off to a bigger company?
Group's model historically would have definitely been to, de-risk and then look to monetize. I think the vanadium market's a bit more unique in the sense that right now there's only two publicly listed primary producers to speak of, which would be Largo in Brazil and Bushveld in South Africa. So I think we're going to evaluate that as we go along. But in the near to midterm, the plan is to definitely follow the mold, which is to take these projects down the path and de-risk it as much as we can, and see where we go with the market and with how the other primary producers are look to diversify, right? So if you think about where these deposits sit in the world, you've got Brazil, South Africa, Australia, and then Finland, where we are. And there's some other assets, obviously, in Canada that are lower grades. They may be more iron focused, more versus vanadium focused. But we're going to continue to look and look to build the asset base in these good jurisdictions where we think there's good projects. And I'd say it's a very early stage for the company right now. Mustafar was kind of the first main step in putting in a serious asset, and obviously we're excited about the grades we're seeing at Sila Selka from past drilling, as well, and thinking about a bit of a hub and spoke model in Finland. But in the kind of next 12 months, it's really going to be about Mustafar and then other M&A that makes sense.
And can you speak to the non-primary producers, the bigger companies who have vanadium coming out as a byproduct of other operations? Can you name a couple of those companies that you see out there, Scott? And then also, if the vanadium price is attractive going forward, do you see some of those secondary suppliers looking to add to their portfolio?
Yeah, so you've got Glencore would be the kind of call it next biggest Western producer at about 5,000 tons a year. But everybody else is really in Russia or China. There's not a lot of, call it, Western world production right now. And I think, the ability for the steel guys to produce more is somewhat limited given its secondary or co-product. So I think that's where the opportunity comes in for some new primary production. And I think obviously there's been quite a price shock here in the last year to the downside, but I think once that all settles out, I'm sure Largo and Bushveld will respectively look to expand in the space and grow their businesses and grow their companies. They both have different expansions planned, and I'm sure at some point we'll look to venture out of their core jurisdictions as well, especially if we see a bit of a rebound in the prices and some stability in the market here.
Why should potential investors who are listening consider Strategic Resources as one of their vanadium exposure vehicles? What would you say to them, Scott?
I think the biggest thing at this stage and the biggest reason for people to invest is our group's ability to go and source transactions. And, we obviously have very deep ties and roots in South America, where we're selectively looking, and really a global network of people that are bringing us opportunities and deals that, we think we're uniquely positioned to take advantage of. I think Mustafar is a great example of that. And we look to do other deals that, will build long-term value for the company at reasonable prices while valuations are depressed here.
Scott, and the best way for the audience to reach out to you and to the company?
So the website is strategic-res.com. And you can reach me at shicks@luminacapital.ca if anyone has any questions on the company or for Strategic or for any of our companies at the Lumina Group.
All right, sir. Well, thanks for coming on, and we're looking forward to watching the company and also look forward to chatting again soon.
Great. Thanks very much, Andrew. Appreciate the time, and hopefully we'll have a lot more details on the projects next time we talk once we've put our heads to the work product.